Well, the credit markets are tightening, but a relatively new form of borrowing is seeing a tremendous amount of growth. It's called peer-to-peer lending.
What is that? Well, the idea is to allow individual investors to essentially be a banker to individuals who need loans. The market is growing so much so that our guest's company has seen a 370% growth in volume over just the last year. It's Chris Larson, the CEO of Prosper.com, the world's largest peer-to-peer lending marketplace. We found this fascinating, Chris, because it's almost like the free market at work. Banks wouldn't lend, so how did this come about?
Well, first of all, thanks for having us. Peer-to-peer lending is really a new form of banking enabled by technology, and we've been delivering investor returns of about 10.7%. by opening up this new marketplace to allow people to directly invest in creditworthy borrowers in an open market. So, it's a yield-starved world. It's a credit-starved world. This we think, is a good solution using new things, new technologies we didn't have even 5 years ago. Well, it is a tough world, and you imagine that there may be some defaulters there. What is the payback rate? What is the default rate? It's been running about 5.2% on Prosper, which is in line with what you see at the major 6 banks that control most of the consumer market. That's pretty good. That's a pretty good. Was that a better rate than you thought? Well, we've been at this now 6 years, so we've done about 45,000 loans. About $260 million has been lent. And, we have just an awesome team in our risk management. We have some of the best folks in consumer credit on our board. Nigel Morris, co-founder of Capital One, for example. So we think we built a good, really good risk model. And that, I think, is now paying off, and people are seeing those great returns, and I think that's why we're seeing the growth. We've seen the comparison to almost like an eBay for banks, where you have one person with the product, money, and another with a need. They need a loan. But tell us about who your peers on the loan side are. Who are these people? People who just have piles of cash and want to lend it out and maybe make a good percentage? Yeah, I think we enable somebody with as little as $25 to invest on Prosper, or it can be somebody with millions of dollars, and we have those types of lenders as well. So we're about 80% retail investors, just the average person, average portfolio size of about $4,000, with about 100 loans that they've made in these small amounts. And then we also now are increasingly seeing large institutions who are discovering peer-to-peer lending and believe it's a very good asset class. Really the same as fixed income investments that they're making, and we're seeing a lot more of those funds now participate on the platform. So I think there's room for both. So, Chris, when do you become a bank? I mean, it seems you're pretty damn close right now to being a bank, in which case you have to, fill out a lot more forms and deal with more regulators, et cetera. Well, we are highly regulated. We're regulated by the SEC and by the banking regulators already. I think the key difference here, which we think is pretty compelling, we don't have to have FDIC insurance. People are taking the interest spread who invest. They're taking the risk. But that means we don't have that systemic risk that a traditional bank would. So I think it has good societal benefits as well. Has the change been made, at least when people first came, they basically needed cash? Is it something else that they're coming to you for now? Yeah, the marketplace has changed since we started 6 years ago. What we're seeing is very creditworthy borrowers. Our average FICO score for those borrowers for new borrowers is about 720. So that's a prime-based customer base. We're also seeing now a shift in many people using Prosper to replace credit card debt. And we think that's actually a really good use case. I think we're seeing Americans strengthening their balance sheets. They're trying to get out of credit card debt where they don't pay down. Prosper loans pay down in 1, 3, or 5 years. And that has turned out to be our safest credit category. So we like the debt consolidation type of a borrower. Well, we like the idea. Chris Larson, congratulations to you. You've been up and running for a while now. It sounds like a proven story. Thank you.
Thanks, Chris.
Thanks so much. Appreciate it.
Well, the Republicans out with their